good day all. Ira Epstein of Linn Associates with your financial market wrap-up, and this wrap-up is for Monday, the 25th of October, 2021, 6:30 p.m. Central Time. Earnings season, it's all over the market. We saw Facebook today. Now you get Microsoft. You saw Tesla, right? Whoa! Now you got $1 trillion company. This morning, before the stock took off 80, once I saw that sale from Hertz, I know I went in with my subscriber video and I was saying, I don't see how you're not going to make that run to $1,000 a share. We'll talk about that in my Spider ETF. When you take a look at stocks, they're up as a whole, metals up as a whole, the dollar up a little bit at the expense of currencies today. Bonds and notes, very, very quiet, not doing too much right here. I wouldn't be surprised if you get some short covering in these futures. They look like they're ready for that. On the energy market, you've gotten pretty high. You probably have to consolidate some of these gains. I was on BNN TV today talking about that. When you look at the S&P, I'm going to repeat. I pointed out when you were here and when you broke down like that what this market seems to have done is the same thing it did here. You got under that 18-week average for a short while. You immediately went up and made a new high. Same thing you did in the past. When you look at this is a vertical price run. Let me give you my fear. You don't have to pay attention to it. Every day is a higher high day. Do you see that? There's a point where you just let the market finally exhaust itself a bit and pull back and you try to come in and play. I would not be chasing a market that every single day is doing that. Inevitably, the market does pull back. From what level, I don't know. If you're not in already, how are you going to get in there and put a normal stop on? As a market technician, not what you do. I had pinpointed, and this was, you'll recall last week, before this was hit, this is I think I put it on around here. I said, you're probably going to make a run for this old high. That wouldn't surprise me. And you could see what the market has done. You just got over it today. And now you're in an area where, okay, you've proven your point. You've widened this out. I think the pullbacks will get bought, but are they going to get bought in the 4,500 area? Where do you buy them is going to be the key, since you have an embedded slow stochastic. Now, let me give you, again, if you haven't taken the enhanced Bollinger Band course, there is a way to look at these stochastics, and what you do with them is you learn that when they embed, they take on a different characteristic. The first thing a market does as a technician is markets, the traditional way taught by George Lane, who invented slow stochastics, is they'll travel between the 80 and 20 level, getting oversold, overbought. They do a heck of a lot more than that. And when George was alive, I showed him what I had discovered. They will take on this characteristic of getting both numbers over 80. You have to do it a certain amount of days. And once you do it, it changes the pattern. Now what happens is it's gone from overbought to locking in a trend. I could have called it a locked stochastic. I could have called it an embedded one. I chose the word embedded. And that's because it locks itself in, and what it's saying to the traders is until that red line closes back under 79, the breaks in the market ideally are getting bought. There's a moving average you put on the chart. I teach it in the enhanced Bollinger Band course on our website under the word education on the top. The NASDAQ, the same thing. So the market goals are the upper Bollinger Band. The pullbacks are bought. Other goal. There is another number called a window envelope. You'll hear Jim Cramer talk about them a lot. You'll talk other technicians on CNBC. The typical way that a trader will look at it is to look at the 18-day average and take a common standard deviation and apply it to it and say, if it drops to that, it's support. If it goes up. There's a better way, I think, and it's by the use of swing lines. I give you the numbers every day if you're a subscriber of mine on the website, so you plot them. And I probably update them 3 times a day because it's not for every one market, but the markets as a whole. Spiders and futures. You're still embedded in the Dow. These are all very bullish markets. If they correct, where might they go? Back to the 18-day average. I'm still betting on Santa Claus. All the reindeers, everybody coming in for that Christmas rally. And I know some of you already think Christmas is here. No, no, no. October is not Christmas. This is just another powerhouse rally. You had a weak September. You've made up from it. Now you might be getting a little bit ahead of yourself. Keep that in the back of your mind. In the VIX cash, the market's still embedded. You'll have an edge on the market if and when the red line here closes over 21. Until then, it gives the edge to the bulls in the stock market because that keeps dropping down. When we step over to the 30-year bond, the resistance is the 18-day average of closes. The trend is down. To neutralize the downtrend, you have to take out this day's high of 159.25. That would not, under the current pattern, start an uptrend. The market, where do you think I would have screamed at you to buy, and where did I scream here? I said I thought the pros were getting out at the lower Bollinger Band. I think the pros got out right here at the lower Bollinger Band. Back up. The easy money was out of the market, as I call it. Dollar index. Why are you pressing to get a market under that band? Here's why. You only stay under that band 5% of the time. Outside of it, actually. Above or below. And it can be a combination. That's it. So when you get down there, that's where I think the quote unquote, that's what I call smart money, plays that percentage. They go, the trend's been down. It's there. I'm going to take my money and go somewhere else. That's what I think they did. Flip of that. The euro got up to the upper Bollinger Band. What are you supposed to do? Out you go. Eventually, the sideways action gets resolved, and out of it, you can go drifting. Here's a better one. And then you set up a potential downtrend. Now you really didn't come out. You went to the upside. Then you started pushing on the lower band. It takes a skill level to watch that, and you embed it. They often go hand in hand. I teach this in my courses. In the British pound, you've lost the embedded reading. As far as I'm concerned, the professionals are gone. Finite. And why? It wouldn't surprise me if the Bank of England surprises everybody and instead of raising rates, might say, well, it did weaken a little bit more. We have another little bit of time. We wait. This market's built in that hike. What do you want to do on the first challenge when you hit a 100-day average and an upper Bollinger Band? I've explained only 5% of the time you stay out of the Bollinger Band. Well, the trend had been up. What do you think I think the pros did? So long, I'm on vacation. Then we get to the Brent versus WTI crude. Well, you can see you got too cheap. You went from $4 down to $1.80. Let the market bounce a little bit here. That's what I'd be telling you. You have the embedded reading. The market still has a target here of the 87.31 level. Would not surprise me. Lose the reading and I'll get a different attitude on the market, but not until that happens. WTI, you hit 85.5. I was on BNN TV today. I said, I'm not convinced that you have to rush at $85 to be buying for the $90 level. Let the market come to you. You don't want to get caught buying these rallies in an embedded reading. You want to buy the breaks in the embedded reading, and if it doesn't break, look elsewhere. You don't have to be in that market. A chart is a chart. Do you honestly care what it is? If the pattern's what you want, trade that market. Why do you get married to gold, silver, copper, Brent? You don't have to. You lost the embedded reading in the heating oil. That to me is the warning sign. The market is not the same market it was when that occurred. It didn't get it back right away. The odds favor you're going to get back to that 18-day average now. You'd have to re-embed. That takes several days to do so. Nat gas, keep your eye on it. I think you'll fail on this rally at the 630 level. That's what I think is going to stop this rally one more time. What did we talk about just last week? I said the first frost will get this market going like that. Well, guess what you had? And you know what's also happening? The press isn't giving enough play to these big storms that have come in out of the Pacific, put out all those fires, number one in California. But what about the snow and the rain that it's bringing? It's helping this parched land. This is a good thing. Unfortunately for New York, tomorrow morning is going to be a disaster for you. Big-time storms are forecast. How much flooding you get, what it does, I don't know. San Francisco, going back there, two of their refineries lost power Sunday. The storms were so severe, so gasoline prices are shooting up a little bit. Got to pay attention to this stuff because it gives you sometimes the edge that the other person doesn't have. And one of the ways to get it is through our whole futures kit. It's everything thrown in one. A couple of our charting programs, the two different types that we have, a web-based one and a download version. Many tools for the beginner, but what about you old timers? You know all these chart patterns? You know cause and effect on the money supply? I created that when Paul Volcker was our Fed chair because nobody really understood, including me, M2, M3, the importance of everything. Well, I've got it in here. So you get it. It doesn't change. It stays just with what it is. But with all this, you get free access to my research as well. So if you'd like to give it a try, if you haven't tried any of this, just give us a call. Go to our website under free offers. You can sign up for it all there. I'm Ira Epstein. You have a great day.